So the high today has been 3,400, and that line on the weekly chart comes around 33.93 or thereabouts. But yeah, it looks like gold could be ready for takeoff, and silver as well.
Why has silver been put on the critical minerals list? It's because silver is very important to the USA in two main strategic areas. The reason it's been put on the critical minerals list is because they need to stockpile it to protect against any disruption in supply. And the biggest supply of silver coming into America is coming from Mexico.
Seasoned market analyst Mario Innecco and technology writer Clive Thompson bring perspectives from very different worlds, finance and culture. Inneco argues that gold is entering a powerful technical phase. Trading at $3,394, it has broken out of a triangle pattern, pushing above resistance at $3,393. With tomorrow marking both the final trading day of the week and the month, he views the monthly chart as particularly strong. Today's high of $3,400 signals the potential for a much larger move. Silver is showing similar strength, trading at $38.82 with a daily high of $38.86. Beyond metals, equities remain steady despite Nvidia's earnings, with Dow futures up 118 points. Currencies are quiet, but he cautions that bond yields warrant close attention. The 30-year briefly touched 4.95% before easing back to 4.9%. He goes further, reminding that gold and silver were once the foundation of money, yet governments have always had the power to rewrite the rules. They can devalue currency, alter values, and steadily erode wealth. He highlights the gap between Switzerland, ranking third globally with about $105,000 per person, and Italy, much lower at $41,000, because of repeated revaluations and monetary debasement. If gold were ever revalued to $40,000 an ounce, he warns, the dollar's purchasing power would collapse entirely. Linking today's market dynamics with history, he shows how Italy's repeated revaluations of silver and gold underscore the risks of government intervention. Numismatic and old bullion coins, he notes, tell this story in tangible form, evidence that monetary systems are repeatedly reshaped, often at the expense of ordinary people. Before we dive deeper into their insights on gold, silver, and the broader financial system, make sure to like this video, subscribe to the channel, and tap the bell icon so you never miss the latest updates.
There's a lot of speculation, and I've been speculating on it, and it's grown especially with the appointment of Stephen Mirren, who's the guy who came up with the idea of the Mar-a-Lago Accords and devaluing the dollar. He's been appointed to the board of the Federal Reserve. Some people argue that he might be instrumental in devaluing the dollar and revaluing gold. All kinds of numbers have been thrown around from the current levels, around 3,500 to 10,000 to 15,000 to 20 to 40. But yes, it will be good news for those of us who have protected or who are still trying to protect our savings, our fiat savings, by getting out of it and accumulating gold and silver as much as we can. Yes, it will keep us going relatively well compared to, unfortunately, what the public is going to suffer. And it's no panacea, because revaluing gold is basically devaluing the dollar. Don't forget, the American currency, or any currency, is just the flip side. It's just a promise to pay in gold and silver. Yes, we don't have a gold and silver backed system anymore. But if you go back in history, if you go back 50, 100, 130 years, all the values that we still have in the foreign exchange market are derived from the weight of gold and silver coins. So we're effectively in that system still. So by devaluing the currency, you're actually devaluing the purchasing power. You're hurting those who don't have real assets. What I'm trying to tell you here, yes, Italy has revalued silver or even gold. Why gold? Well, there's another example, and that's why I love the coins, numismatic coins or old bullion coins, because they tell you about the history and what governments have done. Because I've got here 20 francs, Swiss francs, gold, and I've got here 20 lira gold, and that was from back in the late 1800s, and again, same size and weight. So it just goes to show governments, especially the Italian government, they've been defaulting and ripping off the public for over 100 years. And here we are now. 1 Swiss franc is over 2,000 lira, gold and silver, as you saw. But the government can, they can just change the values and devalue the currency, and it will make things a lot worse. So the other thing I looked at is the GDP per capita of countries, and I see that Switzerland is number 3, and the estimate is around 105,000 US dollars. And you have to scroll down a bit, unfortunately, for Italy. Number 27, it's at $41,000. So there's another example of what happens when you revalue silver and gold, or you devalue the currency, because basically that's what you're doing when you revalue gold against the dollar. It means that the dollar is going to be buying almost no gold anymore, especially if it's at 40,000. And what about government bonds? Some people are saying, well, if they, and I've said that as well, if they revalue and they get like cash in the treasury, they can go and retire bonds. Yes, and the price might go up of the long dated treasuries, but in terms of gold, it won't. It's just going to be an illusion. And I've got a chart here of the T-bond future, or the long bond future, gold versus that, priced in terms of how many T-bond futures you get with 1 ounce of gold. And you can see that since 1999, it's been pretty much a one-way street, except for the period from 2011 to 2015, where there was a correction. And right now, gold is almost breaking out again versus the T-bond future versus bonds. So unfortunately, I think a lot of investment advisors, Wall Street types, and people in general, investors, they don't realize how important gold is. And they think that yields going down and the dollar price of bonds going up, yes, that's not a bad thing, but you really need to measure it versus gold, and you'll see that you're losing out. It's 20 to 8 a.m. London time. We've got spot gold at 33.94, and if you look at this weekly chart, we're actually breaking out of this triangle, the top line of the triangle. Of course, tomorrow is the last day of the week, and also the last day of the month in terms of trading, and the monthly chart looks pretty good too. So the high today has been 3,400, and that line on the weekly chart comes around 33.93 or thereabouts. But it looks like gold could be ready for takeoff, and silver as well. Yes, it's been about 4 months since we began this consolidation in gold, and a lot of people are impatient. I mean, I've been at this since 2002, so I'm a bit more immune. But I would say also the miners are still doing really well, so that's a good sign. What about silver this morning? Well, it's up 23 cents at 38.82. High's been 86 and the low 54. I see that the stock market's pretty steady, so the results for Nvidia haven't really shaken confidence or anything. The markets are virtually unchanged. The Dow futures actually is up 118 points. The currencies as well are quite steady. I noticed though that yesterday the 30-year yield crept up to around 495. Right now we're at 490. As I said though, don't be fooled by the nominal price of these bonds. Keep an eye on the gold price. That's going to be telling you what's happening to your currency.
Clive Thompson notes that the big story began with U.S. equities, where markets pushed to fresh highs. The S&P 500 climbed 0.2% to 6,481. The Dow added 147 points to 45,565, and the Nasdaq advanced 0.2% to 21,590. Behind the strength is a surge of foreign capital, with Reuters reporting that overseas investors poured $192 billion into U.S. securities in June, following a record $326 billion in May, the largest private sector inflows ever recorded. Earnings season added to the spotlight. Nvidia delivered a blowout quarter with $46.7 billion in revenue and 18 earnings dollars per share, far above the $11 to $12 Wall Street expected. Yet, despite the strength, shares fell as much as 5% in after-hours trading before settling lower by 3% as concerns mounted over future guidance, particularly around chip sales to China. In the metal space, silver edged up 13 cents to $38.72 while gold slipped 6 to $3,390 before recovering slightly to $3,394 and $38.88 respectively. The real shift, however, comes from policy. For the first time, the U.S. government has formally placed silver on its list of critical minerals, signaling its strategic importance in technology, defense, and energy, and setting the stage for growing demand. Let's get back to the interview.
So the big news yesterday was all about Nvidia, and we'll also be talking about the silver stockpile, which will be formed in the United States. But let's start with the stock markets. So US stocks reached an all-time high on Wednesday. That's last night. The S&P 500 was up 0.2% to 6481. The Dow rose 147 points to 45565. And the Nasdaq, technology mostly, index climbed 0.2% to 21,590.14. So this wall of money continues to flow into the stock market, pushing stocks higher almost every single day. And a number of people said, what's this wall of money, Clive? Where is it coming from? So I'll just explain that to you. There's basically three sources. One is foreign buyers. It's foreign money coming home. Foreigners don't want to keep their money in fiat currency, and they're looking for something which will hold its value better. And given the past performance of US stock markets, one of the best performing markets in the world in recent years, they see that as probably continuing, and they see that as a better home for their money than keeping it in cash. Now, just in support of that, I'll read you a little article from Reuters a couple of days ago. They said, figures last week showed that foreign investors bought a net 192 billion of US securities in June. This followed a record net purchases of 326 billion in May, swelled by the largest ever inflow from the private sector. So that's your first source, the foreigners buying US equities. The second source comes from the increase in M2. That's the money supply, slightly broader than the narrow money supply M1. So as the government, or rather the Federal Reserve, prints money and money comes into existence, also via the banks increasing the lending, that creates money too. As money comes into existence, that money gets deployed into assets. So what's happened here, according to the official figures that you can read on the Federal Reserve website, money supply M2 over the last year has increased by over $1 trillion. And the third source of money for this wall of money coming to Wall Street comes from basically government spending. According to the government's own numbers, they have spent so far this year, 2025, and 2025 is not over yet. We've got another couple of months before the end of September, which is the end of the official year for the government. According to the official numbers, so far this year, they have spent $1.6 trillion more than they have collected in taxes. So again, that's new money coming into the system, 1.6 trillion from the government. Last night we had the results of Nvidia. They reported Q2 earnings. They were a very good set of results, very strong earnings. They reported 46.7 billion in revenue, with earnings per share coming in at $1.08, beating the estimate of $1.01 or $1.02. But despite these wonderful earnings, the shares dropped by 3% in after hours. They were down 5% at one point, and that was mainly due to concerns about future guidance, even though future guidance was very strong. But of course, there are concerns about chip sales to China. They didn't make any chip sales, or none of the H20 chip sales to China in the last quarter, but it's not the only thing which China buys. So there were concerns about whether sales to China in the future will impact the future growth of Nvidia. I don't think so, but because if China wants chips, they'll just buy them from another country through the back door, I suppose. Precious metals were up a little bit, or at least silver was. Silver was up 13 cents at $38.72. I'm just looking. I haven't got it in my screen at the moment. I might bring it up now. So up a little bit, and gold was down $6 at $33.90. I see it's 3394 at the moment on the gold price, and the spot silver price is 38.85. Both of those prices are up on the prices I just mentioned slightly. Now, silver has a new status from the 25th of August, a couple of days ago. It's been added by the US government to the US critical minerals list. That's in a report on the US government issued on the 25th of August. And basically, it's the first time it's been put on the critical minerals list. Why has silver been put on the critical minerals list? It's because silver is very important to the USA in two main strategic areas. One is the defense industry, and the second one is the electronics industry. Of course, we mustn't forget the solar panels industry, which is maybe a subset of the electronics industry. So the reason it's been put on the critical minerals list is because they need to stockpile it to protect against any disruption in supply. And the biggest supply of silver coming into America is coming from Mexico. Now, you might say, well, there's no risk to that supply coming out of Mexico, but they've assessed the risk at a 4% probability. Low probability that the supply would be disrupted, but high impact. So how could the supply from Mexico be disrupted? Well, it could be that Mexico unilaterally decides to prevent silver from being exported to the United States, maybe in retaliation for some tariff spat, for example, or it could be that there might be some civil or military unrest in Mexico or some other event which causes like a generalized industrial action, for example, which causes silver supplies to be disrupted. Not a very high probability, but it's not impossible. So that's why America has put silver on its strategic reserves. Now, they did sell off all their stockpiles in the past. Up till 2000, they were selling almost all of their silver. They may have a little bit left now, but clearly now it's become a strategic mineral. They'll have to rebuild that stockpile, which should, in my opinion, put a bit of a floor under the silver price.
What stands out most is not just the price action in gold and silver, but the convergence of forces pushing them higher. On one side are the technical signals' renewed momentum after months of consolidation, with charts pointing toward further strength. On the other side are the broader market crosscurrents, corporate earnings providing support while trade restrictions and rising bond yields inject fresh uncertainty. Layered onto this is policy. The U.S. government's move to designate silver as a critical mineral, underscoring its importance in defense, electronics, and renewable energy. Taken together, these aren't isolated developments, they are interconnected signals that precious metals are not only reclaiming their role as financial safe havens but are also emerging as strategic assets central to long-term economic security. Given the breakout in gold, the strategic recognition of silver, and the crosscurrents in broader markets, could we be witnessing the early stages of a structural shift where precious metals move beyond safe haven status to become central pillars of both financial stability and national security? Stay tuned for more fact-driven insights into the financial system, and don't forget to like and subscribe so you never miss the weekly updates. If you're also interested in Bitcoin news, make sure to check out our other channel for dedicated coverage. Thanks for your support and enjoy the video.